Hello and welcome to today's Market Matters video update. It's the first video update for 2024. I'm Harry Watt, joined by James Gerish. Obviously into the throes of the new year. We're midway through January now. We're going to take a quick look back at what happened in 2023, how our portfolios did, but also we're going to take you through some themes for the year ahead. So kicking things off, James, 2023 was a good year for markets more broadly, and for the Market Matters portfolios, we seem to do quite well. Can you run us through the numbers?
Yeah, so it turned out to be a good year. It wasn't a good year throughout. So there were lots of choppy price action throughout the year. Returns were pretty mundane leading into the back end of the year. Markets bottomed at the back end of October, really late in October. And then they had a really strong November and December leading into Christmas, a theme that we'd written about extensively in our daily reports. And we actually had as you said, a positive year for markets. The ASX 200 accumulation index up 12.42% for the year, so that is inclusive of dividends. The small ords here in Australia did a little bit less, but they were still positive for the calendar year 2023. International markets were very strong, stronger than our own. That comes down to more around index composition. So technology stocks, growth stocks really underpinned a really strong year. If I look at developed markets, so developed versus emerging markets, developed markets did better than the emerging market space, but some of the emerging markets started to kick in at the back end of the year as sort of those macro headwinds eased and became tailwinds in the form of interest rates. So just briefly running through the Market Matters suite of portfolios, the active growth portfolio in December did 7.99%. That was against a benchmark return for the month of 7.26%. So our outperformance there. On a one-year view, it was up over 22%. Again, 10% ahead of the market, which we're really pleased with. And looking from an inception to date perspective, we're up over 14%, which is about 5.2% annually above its benchmark. So really happy with that portfolio. Macro conditions really influential in 2023, so that suited our approach. Income portfolio, 3.9% in December, above its benchmark by about 3%. On a one-year view, it was 9.43%, about 1.5% above its benchmark. And looking from inception, we've done about 8.5% a year, which is 3.3% above its portfolio benchmark. International equities, as I just alluded to, were really strong, Harry, and they were underpinned a lot by the growthier areas of the market. So the national equities portfolio did 4.8 in December, a couple of percent or nearly 3% above its benchmark, 26.6% for the full year, 3.5% above its benchmark, and has now done over 17% per annum since inception, which is about 6% above its benchmark. And then finally, the emerging companies did about 6.3% in December, which was nearly 3% ahead of, slightly below its benchmark. The benchmark return for that was 7.2%. For the month, on a one-year view, it's 9.37%, which is 1.5% above its benchmark, and 5.5% per annum since inception, which is 3.2% as benchmark. That hasn't been going as long as the other portfolios. So all in all, I know it's a bit of a mouthful, but overall, all portfolios outperformed their respective yardsticks, which is the benchmarks that we speak of, and are all going well in the longer time frames as well, Harry. So that's the wrap of portfolio performance for 23.
So that's last year, but markets are all about looking forward and looking about what's ahead and what we can do for our portfolios and our subscribers for 2024 is about, sort of repeating those gains again, or those outperformance of the benchmarks, hopefully. So that's what we're going to focus on. For 2024, James, some big themes. Obviously, the markets pulled back a little bit to start the year. Is that at a trend that we can extrapolate, or are we going to see this choppy price action for some time? Where can we see 2024 heading, and what are some themes we can play on the investment space?
Yeah, I wouldn't. I'd put a cautionary note out initially saying I wouldn't extrapolate those 2023 returns and expect them year in, year out, because it's hard to achieve. Those levels of outperformance relative to the benchmark, particularly in our active growth strategy. It's nice when they come, but looking forward, I mean, the market in 23 was all about sort of the macro drivers. It was a really macro-driven market. Interest rates, we speak of a lot, had a key influence on markets. To give you some context around that, in October, bond yields peaked over in the US. They subsequently dropped 1%. The 10-year US yield dropped 1%. From there, and equities rallied 16% over there. So it is influential. I don't think 2024 is going to be as macro driven as 23 was. I think interest rates are obviously the key phenomenon out there, and we saw a massive change from a market's point of view around what we're expecting going forward in interest rates. That's obviously driven bond yields lower. Bond yields and interest rates are still high, though, and the market's now extrapolating a lot of cuts into 2024. I think that's probably a little bit optimistic. I don't think we'll see as many cuts as the market's priced in, and that's creating early on in the year a little bit of disappointment in equities. So I think it'll be a choppy year from a macro standpoint. I think it'll be probably a choppy year from an equities point of view. That suits our approach. So we're all about on a day-to-day analysing what the markets are doing and looking for those incremental changes in market positioning and trying to capture gains as a result of that. And that's worked last year. It's worked over the longer period. So we expect it to work again in 2024. But this concept of being a little bit more nimble in our positioning, I think will really come to the fruition in 2024, because I'm reticent to put out a lot of big picture views at the start of the year, because I think it's a year where last year some of those expectations didn't come to fruition, but we still managed to generate really good portfolio alpha in the environment we were dished up. So eyes up is what we're going to start with 2024. Harry?
Eyes up footy. Just one macro theme, or not really macro theme, that has sort of chopped markets around this year, the US election. So 2024 is an election year for the US. Trump has won his bid in Iowa there. US election years, it's interesting for markets. You tend to see a bit of weakness into May, but it does sort of provide some support back end of the year. Are we expected to see that sort of same theme play out, particularly with that Trump threat coming through again?
Well, I'm blown away that we're now talking about Trump versus Biden for the next US president. Maybe we'll see that someone else steps in instead of Biden. Otherwise, Trump looks odds on to be the next US president if he's competing against Joe Biden again. So we wrote about some stats around US presidential elections this morning in the MM report. You rightly point out the stats are there that going into an election, markets typically rally, and years after the election, markets typically rally. I know there was a lot of concern, a lot of scratching your head after Trump got elected last time, but markets were strong after that. So you can only go on history. History suggests that US election years are positive. So we'll go on the back of that. We won't hang too much on it. And there's going to be a bit of a circus leading up to this election, no doubt. So probably more to play out. I'm not 100% sure Joe Biden's going to be his counterpart or competitor in this election coming up. So we'll see how that plays out again. We'll amend portfolios and we'll trade our way through whatever comes our way.
Staying nimble. And then moving on to some stock-specific stuff, obviously some big swings and roundabouts, particularly in the resources space this year. We've had uranium that's ripped. We've had a couple of gold names that have really been choppy. We've had lithium that's been quite under pressure. Are there any key comments on some stock-specific stuff you've seen this year so far?
I'd start 2024 by probably thinking about fading trends. So we've started doing that. Uranium space, we've been big bulls in the uranium space. We've had good positioning around that. But we've faded that, so we've sold this prevailing strength. I'm not sure if the uranium stocks will go further, but we took good profits in our uranium exposure across the suite of Market Matters portfolios that held them. By that, they're plus 50% gain, so we're going to lock those in. Lithium, you made mention of, it's been weak. I think now's the time to potentially start fading that. So we've got mineral resources in our flagship, in our active growth portfolio. We're down on the position, but that's starting to look interesting again. Probably more pure play, Pilbara, PLS. I think that's starting to look interesting at these low levels. So a active discussion we're having on the desk at the moment. Gold. So today, to give you a name, Evolution, which we own in our growth portfolio, we've got a 3% position in that stock. Down 20% today on a weaker than expected production update. We're adding to that position, but we're going to look at Northern Star as a potential funding vehicle into the next uptick in that stock. So I think remaining nimble in our exposures will be key. Taking opportunities, I think Evolution is an opportunity today on the market. We wrote about Aurora on the other end of the spectrum. It's something that's been beaten down in 2023. I think the outlook for these more defensive style businesses in 2024 will improve. We know packaging stocks do better when inflation comes down and economic growth comes a little bit off the boil. It's a more defensive allocation, so that's a stock that we own, but we like at these current levels. So there's a lot of interesting stock positioning that we're actively looking at the moment. So there are a few names that I'd go out and highlight right now, Harry.
All right, well, it's great to be back in front of the camera for a new 2024 new year here. We've got a big year ahead for Market Matters, so we hope you take a lot out of the year ahead as a subscriber and as a listener here. But thanks for joining us today.